Hey folks, here's another Google Options update for week 38. And last week on Monday over here, I put in some bearish trades because I thought Google was close to resistance and it's about to go down. Obviously that did not happen, and the stock closed very bullish on Thursday to end the short trading week at 108.4. So I did have a 106 short call here that would have expired in the money. And I also had a bear call spread. However, on Thursday, the price action was looking fairly bullish. So what I actually did was rolled these options forward. So I tweeted this out on Thursday, just showing my trades for that day. What I did was roll my 106 call last week to 107 call this week. And this week is a full week, so we're going to end on April 14th. Today is the 10th. And that roll was a net credit of $22. I also rolled the spread and put in some 0 days to expiration options, mostly just trying to trade short strangles. You can see I was short the 108 put here and then short the 109 call, meaning I wanted the stock to end the day between 108 to 109. Which it did. So my options there expired out of the money. And here's a look at Thursday afternoon, where my Google options here, all of these short puts, you can see my position is negative, so they're all short, expired with unrealized profit and loss here, which turned into realized after the day ended. So I've adjusted my premiums to account for all the additional credit that I received on Thursday. So for the final tally of week 38, I made $333 in premiums. No transactions with the shares, so I still own 0 shares of Alphabet. And now my profit is just below $8,000, which is a little bit higher than what it was last week, and pretty much on track with the yellow dotted line here. So I'm pretty happy with the results so far. Now later this week, I will be going on vacation, so I won't be back until early May, and I'm not going to have access to IB, my trading platform, over the next few weeks. So what I'll do is, instead of trading just weekly options, because I won't be able to manage them while I'm away, I will be selling longer options and option spreads, maybe like a month out. So if I zoom out, this is the daily chart. I drew this yellow wedge, which it looks like we broke out of on Thursday last week, but now we are coming back and retesting that line. And there's also this bullish blue channel that's going up. And you can see the market went down and then up, down, up, down, up. So unless the stock just moves above this and shoots up, I think there is a pretty good chance that the next point it's going to touch is down here on this blue line somewhere. So if I move this bar to like May 10th, for example, this is around when I'm going to come back. Actually, let's go with May 12th because just looking at the option chain, May 12th is an expiration date, so that's a Friday, most likely. And I'll definitely be back to manage this trade if it needs to be like rolled or closed early. So May 12th is this blue line here, and where is the stock most likely to go? Well, if it moves down at the same angle like it previously has, then we're looking at about $92 is where the stock could end up on the low side. However, if it goes up, then very often when a stock breaks out of its current trading channel, it's going to double the range of that channel. So if I double this, then very likely the stock could go up to 125, which is just over the previous resistance level, which is up here. So I have to be open to the fact that the stock could either go up to 125 or down to 93. So I think the safest thing I can do with this options this week is an iron condor. So here's the option chain for May the 12th. At $92, which is the lower bound if the stock were to fall, I can make a premium of 87 cents. And maybe I'll just have a $2 spread. So I'm selling the 92 and I'm buying the $90, and that'll give me a premium of about 21 cents. I'll try 22 and I'll have 4 quantities for this. So the most I can lose is $800 because there's a $2 spread, and I have 4 quantities minus like $88. So about a little over $700 is the worst case scenario if Alphabet drops below $90 on May the 12th. And I will submit this. And then on the call side, I think about 122 is pretty reasonable. Now, looking at the option chain for the calls, there actually isn't a 122 or 123 strike. So I'm probably going to go with the 120 strike instead and sell that for 82 and buy the 125 for protection. So this call spread is going to be wider than the put spread I put on earlier, which is why I expect the premiums to be a little bit more. I'll try to get 43 cents for a pair of contracts, and I'll drop this down to 3 quantity just so it's a little bit more balanced with the puts. And maybe I'll drop this down to 20 and drop this to 41.
Order filled.
Okay, the bear calls got filled. and maybe make
Order
this
filled.
19, so that filled as well. So that's a total credit earned of 195 after commission, which is 263 Canadian, and the IV is decently high this week. So what I currently have are these two spreads that I just put in today, also a bull spread where I'm short the 109 and long the 110, so hopefully Alphabet closes below 109 this week. And then I also have this individual 107 short call, which was the 106 call that I rolled from last week. So I may have to close this one before the end of this week if Alphabet goes much higher, but otherwise I might just leave it and see if it expires out of the money by the end of the week. So I'm going to have a few weeks where I'm not going to earn any premiums, but when I come back, we'll see where the market is by then. A lot can happen in a few weeks, but hopefully my options will expire out of the money and I'm going to take it from there. So thanks a lot for watching. Good luck with your investments, and I'll talk to you in the next video.